Hi, my dear students. How are you doing? Punarvas Jayakumar here. So, guys, a lot of you have requested me, sir, please also do some, what do you say, sessions on CARO. So, if you've seen, I've been doing some sessions on tax as well, because it's always been an indulgence in my passion, both direct taxes and auditing. And so, I thought, anyway, since I was obviously busy with law classes and during the free time, I also handle these, doubts that you raise on, auditing and direct taxes. So I thought, let me just make a video. In fact, I'm traveling on work, so I do not have my studio set up. So please make do with this. So from now, I'll be starting a series on CARO 2020 because there have been quite a considerable number of changes. And also, it is always nice if you see the practical side of things. So I am making this video. It's a series of videos, maybe a weekly once I will release. So whenever I get the time, I'll record and I will do that. This has been done after an extensive research on CARO 2020 for the benefit of all of us, CA inter students, CA final students, and of course the professionals who may be in the industry or practice. So I hope this video will be useful to you for academic purposes as well as practical purposes. Let's hope so. So let us get into the video. Today will be just an introduction. So we'll just start with it. So guys, CARO is actually where? CARO is in section 143 subsection 11 of Companies Act. So section 143 subsection 11 says that the central government can issue an order. So that order is nothing but CARO 2020. So CARO means what? Companies Auditors Report Order. You know that, right? Companies Auditors Report Order. So earlier we had CARO 2016 and now CARO 2020 is applicable for all the audits from financial year 21-22 onwards. Okay. So I've researched various articles online and also I have read through the entire guidance note, ICI guidance note, which is I think roughly around 374, I think around 400 pages. I think around 370 to 400 pages. You can find it in the institute website. In case you can, if you wanted, you can refer it. Now let us get into the applicability of CARO. So what I have done is first we'll discuss the applicability in today's video. Then later let's go into the clause by clause analysis. Now for the clause by clause analysis, I have also extracted. I found ITC annual report very nice in terms of analyzing the CARO. So we'll do a clause and then we'll go to that ITC report and understand how it is. And for the benefit of all of you, in the next video onwards, when I do those clauses, I will also give the ITC annual report, as a Google Drive link. You can just click it and download. And of course, I'll also give the link to the CARO guidance note issued by ICI. So let me just show you how it is so that you can have a fair idea. Let me just share the screen, guys. So pardon because there's no studio setup here, unfortunately. So you have to make do with this. Let's see. All right. So if you see, guys, this is the ITC annual report. So let us analyze the law, or rather the CARO, the clause by clause analysis using this report. It will be very nice. We shall do that. And apart from that, we have the ICI guidance note. So this is the entire guidance note, roughly around 370 pages, which ICI has done. So rather than you guys going through it, I have made a separate, chart, or rather an Excel sheet where I have collated all the important points. This will also help in your practical life, because you can check those important points not only from the report but also from the guidance note. So that is what I have done. That exercise took some time, but it was worth it, I feel, because it will help us understand, things as it can and as it is. Right now, let us dive into. Let me share one second. There you go. All right, guys. So let us now enter into what do you mean by, of course, I mean, what is the applicability of CARO? Now, the thing is, all basically, guys, it applies to all the companies, correct? It applies to all the companies except a few companies. Now, what are those few companies to which it doesn't apply? That we need to see. So generally, it applies to all the companies as such, except a few companies. Now, as I told you, what are those few companies? Let us get on with it and understand what could be those few companies. What could be those few companies? Right, one second. I just some problem with this. One second. Yeah, now we are good to go. Let me share. Sorry, guys. Done. So as I told you, it will apply to all the companies except specifically exempt companies. Except specifically exempt companies. Uh, so what are the exempted companies? We'll see. But will it apply to all companies, including foreign companies? Yes. So it will also include to foreign companies. It will also impact foreign company. Now, what is a foreign company? Basically, guys, we know company. If you see 2 clause 20 of Companies Act, company means a company which is incorporated in India, correct? And under the current law, that is 2013 Companies Act, or under the previous company law. If you see, it means a company incorporated in India. But is foreign company a company? No, because foreign company is not incorporated in India. Foreign company has a separate definition. It says any company or a body corporate. So as you know, since foreign company is not a company as per 2 clause 20, foreign company will generally be under body corporate definition. So any body corporate or any company incorporated outside India, correct? Outside India. So foreign company, this will be incorporated outside India. And what, guys? It will have a place of business in India. It will have a place of business in India. So main companies incorporate outside India, but it will have a place of business in India, either by itself, that is physically, or through an agent, either physically or even through electronic mode, right? That is the important thing. So either it can have a direct link or through agent. Plus, one more important condition is what? One more important condition is it conducts business activity in India. So business activity in India. So as you can see, your Walmart and Amazon, and Walmart, of course, acquired Flipkart. So all these things will have their companies registered outside India, but of course, since they have their operations in India, it would very much be part of what even IKEA, for that matter, it opened in Bangalore recently. It's in Hyderabad. So IKEA as well, though the company is incorporated outside India, through their agents and to the other companies they're holding in India. Hence, CARO will very much apply to these companies as well. So first is it will apply to all the companies and except those which are specifically exempted. Now, foreign company is not exempted. So first of all, will it apply to foreign company? Yes. Second, will it apply to the branches of a company? Would it apply to the branches of a particular company? What do you think? Will it apply to branches? Answer is 100% yes. There is no separate exemption for that. So it will definitely apply to the branches of a company. So if Infosys has various branches across the country, definitely it would apply. So the audit report submitted by a branch auditor shall contain the CARO report as well. This audit, this report order is also applicable to any audits of project office or a liaison office established by a company outside India to whom the order applies. So basically, if it is, let's say, for example, there was a uh, you know Tesla, before incorporating a company in Bangalore, they had a project office in Bangalore. They set it up to figure out whether it is possible for them. So if it applies to Tesla, and if they start operations in India, if it applies to Tesla Incorporated USA, obviously it will apply even to this project office as well. Okay, because they're doing some business activity in India. I mean, whenever Tesla starts, is what I'm saying. Yes, that's what it is. Now, the most interesting thing is CARO will not apply to which company. That is what we need to see. CARO will not apply to which all companies. So, guys, CARO will not apply to, let me just write down here. CARO will not apply to a banking company. CARO will not apply to an insurance company. Why so? We will discuss the why part of it also. It will not apply to a banking company, insurance company. It will not apply to a Section 8 company. It will not apply to a one-person company. It will not apply to a small company. Banking company and insurance company, it will not apply because, guys, for this banking company and insurance company, we have separate legislation. We have the Banking Companies Act, and we have the Banking Regulation Act, and we have the Insurance Act, and we have the Insurance Regulated Development Authority. That is why for this they have separate rules governed by separate rules and regulations, so it will not apply. Now, Section 8 company essentially is a company for philanthropic purposes. Now, when I am opening a company for philanthropy, I cannot subject them to, what do you say, more regulation. That's why for Section 8 company, it's not there. One person company is a private company which has only one person as its member. So first of all, that company, since it has only one member, it will not have any general meetings as such. And it's predominantly to build the concept of corporatization of sole proprietorships. That is what the idea of one person company was. So for corporatization of sole proprietorships, I do not want to subject them to additional regulations. Hence, OPC, private company, it will not apply. As I told you, this will apply to all the audit in financial year 21-22 onwards. But guys, most important change is small company. What is a small company? Mind you, small company is a private company whose paid up capital and turnover in a year, both, is less than or equal to some amount. This has been amended recently, last week, sometime in September 15th or 16th, an amendment has come. Paid up capital less than or equal to 4 crore. Earlier it was 2 crore. Very important point. And turnover less than or equal to 40 crore. Earlier it was 20 crore. Very, very important point, guys. Extremely important. They have changed the limits now, right? Paid up capital less than or equal to 4 CR and turnover less than or equal to 40 crore will come under the ambit of, what do you say, small company. So any company, if you are the auditor of any private company whose paid up capital in the last year was less than or equal to 4 CR and turnover during the year was less than or equal to 40 CR, then CARO will not apply, right? CARO will not apply to these companies. These are the companies where CARO will not apply. Next is a very interesting point, that is any private limited company. Correct? Any private limited company, normal private company, apart from small company and apart from OPC. So basically, this company should not be a holding company or a subsidiary company of a public company. Should not be a holding company or a subsidiary company of a public company. So if there is a company X Limited and you have a subsidiary P Private Limited, this exemption will not apply. Similarly, there is P Private Limited whose subsidiary company is Y Limited. This exemption will not apply. Mind you, I'm not saying CARO will not apply. The exemption will not apply. Basically, it should be a pure private company, standalone private company. Now here the limits are interesting, my dear friends. What are the limits? First of all, the paid up capital and the reserves and surplus. I repeat, the paid up capital and reserves and surplus should be not more than 1 CR, right? Not more than 1 CR. So it less than or equal to 1 crore, not more than 1 CR. Then total borrowings of what? Does not have total borrowings of more than 1 crore. Does not have total borrowings of more than 1 crore. So first of all, the paid up capital and reserves and surplus should be less than or equal to 1 crore and does not have total borrowings. Total borrowings. The total borrowings should not exceed how much? 1 CR. These borrowings are from where? These borrowings are, is it like borrowing from money lenders or high net worth individuals? No. Very clearly given, borrowings from banks / financial institutions only. Borrowings from banks or financial institutions only. It should not be, more than 1 crore. It should be less than or equal to 1 CR. And lastly, total revenue. The total revenue should be less than or equal to 10 crore. My dear friends, should all the conditions be satisfied, or how do you think? Should I follow all conditions or should I follow only one condition? What should it be according to you? Very, very interesting to know that all the conditions must be satisfied. All the conditions must be satisfied. Only then CARO is exempt. For the exemption, it is a collective condition. For the exemption, it is a collective condition. So it should be a collective condition for the exemption, else CARO will definitely be applicable. Now the question is, all these things, that is the paid up capital and reserves and surplus, total borrowings and total revenue, I should see, when should I see it? Is it the latest audited balance sheet? Is it the previous year, or is it any time during the year? Now again, this is very interesting to know that paid up capital and reserves and surplus should be seen on the balance sheet date. On the balance sheet date. So obviously for financial year 21-22, as on 31st March 22 is what I need to see. Borrowings, my dear friend, should be at any point of time during the year. Any point of time during the financial year. So guys, during 1st April, 21 to 31st March 22, let's say during April 21 itself, the company has borrowed more than 1 crore. But during the year, it has squared up all the loans. As on 31st March, outstanding is 0. No, right? Obviously, their exemption will not apply because the borrowing was more than 1 crore. Borrowing was more than 1 crore during any point of time during the financial year. And lastly, total revenue does not exceed 10 crore. Of course, this is for that particular financial year. Revenue cannot be obviously seen whenever during the year. It's obviously overall revenue of the year is 10 crore is what you have to see. Next question, what if a company converts into an LLP during the year? What if company converts into an LLP? So guys, if company converts into an LLP or any constitution firm, whatever it is, then to which CARO is actually exempt or it's not covered under the Companies Act, and of course CARO also will not apply to that particular constitution. So if it was not applicable as a company, obviously it will not apply as a LLP and all that. Then will CARO apply to real estate investment trust? That was also one question that generally was being asked. Will it apply to real estate investment trust? Now, what according to you is real estate investment trust? So let me just share one more window to help you understand what is a real estate investment trust. So guys, in a REIT, what happens is it's more like operates like mutual funds, where I can purchase, rather than buying a house, I can purchase some units in a real estate investment trust. So basically the investment will be done, and obviously when I invest, I would expect some dividend. Now how is this dividend obtained? So basically this entire real estate investment trust will be managed by a REIT manager. Just like we have a mutual fund manager, we have the fund manager, we have a REIT manager. So the fund, through the fund, because of all the money that I have collected from unit holders, professional fees will be given to REIT manager, professional fees, and of course, professional management services is what he will give. It is one part of the story. As far as REIT properties are concerned, so basically what this fund does, very interesting to know what this fund does. They will invest all unit holders properties into unit holders, the amount collected into REIT properties, real estate investment trust properties. So they will have a stake or ownership in the REIT properties. And of course, through those properties, rental income is derived. Rental income is derived. So all the unit holders, actually, they can also create a trust. There will be a REIT trustee. REIT trustee will definitely look after the interests of the entire unit holder. Just like we have a debenture trust deed and debenture trustee, we also have a REIT trust, which is governed by a REIT trustee. He will represent the interest of the entire unit holder, and trustee fees will be given. Trustee fees will be given to that particular person. Very, very simple. Now, why for a REIT, why CARO is not applicable is because the entire operation of REIT, they are governed specifically by SEBI, Securities Exchange Board of India. Hence, for REIT, obviously, it is not applicable. It is not applicable. Now you may ask one more question, sir. Does this, what do you say, CARO, does it apply to consolidated financial statements? Consolidated financial statements. Let me repeat. CARO does not apply to consolidated financial statements except for paragraph number 3, clause 21. So the 21st clause will apply to, consolidated financial statements. In what way? Because there they say that you have to report on the consolidated financial statements only with respect to paragraph 3, clause number 21. So basically it will not apply, other clauses will not apply, only clause 21 will apply. So the auditor is not required to report on the rest of the clauses of paragraph 3, only clause number 21. Now what is clause 21? All that we will see in the ensuing classes. So guys, I have made, just for your knowledge, I will show you what we have made and how we are going to go about it. So just comment and share, like on this video, and more than like and all that you leave, just comment saying that what type of, apart from this, you need anything more, because I'll show you now. I'm going to show you what I'm going to do. So let me just show you. There you go, guys. So what I have made is, I have made each clause along with these details and along with what? The guidance note. So for each clause, I have made a detailed analysis, and also checked. I've given the guidance note also, what the guidance note says. This is what the paragraph says, and this is what the guidance note says. So I have collated the 370 pages thing into this. This will be shared with you in the next video onwards, so that you can also use it in your work as well. So all these clauses, detailed clauses, we will discuss. And of course, as I already showed you before, we will be checking the guidance note. I'll give you this also as a link, which is already there. I have already incorporated everything, and of course we will analyze everything through ITC's annual report. So I hope this was of use, the basics. So let us go into the analysis part very fast. Quick revision. So CARO will apply to all companies. So let me just once again share the screen so that you can watch it with me, my dear friends. Yeah, a little bit not well also. I think you can see the change in voice. Yeah, so it applies to all companies, including foreign companies. Foreign companies are companies outside India. And yeah, we have seen the difference between company and foreign company. It will apply to all branches, and it does not apply to banking company, insurance company, Section 8 company, OPC, small company. Small company is a private company which paid up capital and turnover less than 4 CR and less than or equal to 40 CR, respectively. Plus, it will not apply to private limited company, which is a standalone private limited company. All the three conditions must be satisfied. PUC and RNS should be less than or equal to 1 CR on the balance sheet date, and total borrowing should be less than or equal to 1 CR from both banks and financial institutions any financial year, and total revenue should be less than or equal to 10 CR for that financial year. All the three conditions must be satisfied, only then CARO will not apply. Even if one condition is breached, then CARO will apply. This is the revision, my dear friends. And will it apply to consolidated financial statements? Only the clause 21 will apply. Will it apply to REIT, Real Estate Investment Trust? Answer is no, because SEBI will govern. And lastly, yeah, that's about it. I think we've covered everything. Yes, and will it apply to if a company converts into another constitution? No, it will not apply. So on that note, let's end the session. See you soon. I will release it probably next week, clause by clause analysis, some two, three videos of 20-25 minutes each, so that you'll also be in a better position to understand. Okay, thank you so much, guys. Love you all. Please comment below as to exactly what you would want, so that I can modify it accordingly. We will go as practically as possible, clause by clause analysis. Okay, I'll show you ITC also how they reported. But if there's anything much more that you want and anything else that I want to add, please let me know. Okay, take care. Bye, guys. Take care. Bye. See you.